In this post, we will be talking about how to use leverage when investing in real estate. One small down payment and a loan may seem threatening, correct? Well, not necessarily, as you're about to find out. The previous boom and bust cycle was unprecedented in the history of residential real estate. In a typical market, leverage is an effective idea, especially if you're a real estate investor. With leverage, you could build a big return on investment. This is because you have a lot less investment capital involved to begin with. If you purchase an investment for only 20% down, you can possess a large amount of value. Nowadays, there are numerous regions in which it's less costly to purchase than to rent. In many of these regions, it is not uncommon to discover investors getting over 20% gain just on cash flow alone. In the bubble years, the exact opposite was true. In the event you bought a home for an investment during those years, then you would know firsthand that the rents that you were paid did not even cover the mortgage payment. You had to feed the house each and every month since you did not have enough cash to cover all the expenses. Whenever it's less expensive to purchase rather than to rent, there's something flawed within the market. Bear markets are terrific opportunities with regard to buyers since the slow market functions in your favor. In the current environment, many individuals are not able to get loans or don't have enough money for a down payment. As a result, investors step in to take their part. Purchasing real estate is a good hedge against high inflation. Ultimately, the real value of the dollar will proceed to depreciate, while property will hold its own in real terms. Right now, you'll find surprisingly low rates of interest, which offer the opportunity to secure a lower rate. When inflation increases, and yes, it eventually will, you could increase rents while repaying the loan with devalued dollars. Now, does this imply that real estate investing is easy or that you should try to buy with no money down? Absolutely not. A 20% down payment is now an absolute minimum if you cannot locate a seller who is willing to carry the note. In fact, too much leveraging can be dangerous. You should also aim for a minimum of a 5% return on cash before making an investment. And this consists of all the costs related to the property. A lot of new investors will leave out essential expenses, which include vacancy loss as well as upkeep. It's essential to take into account each and every cost. When you run the numbers, you will find that a larger capital investment can often be necessary to clear the 5% cash flow yield benchmark. To conclude, you should be using leveraging to your advantage. Also, you should be practical and careful about it. It is also wise to lower your risk by making sure that you will have positive income from renting the property. And you can also use our free cash flow analysis calculator at the link below this video. You can import each and every expense and income and determine whether or not the property makes good financial sense.